If you own your own home and you want to grow your wealth, you may be asking, should I pay off my home or buy an investment property? It's a very worthy question to ask, and in today's episode, I plan to help you answer that question for yourself. Hey, I'm Ryan from onproperty.com.au, your daily dose of property education and inspiration. And when doing research for this article, I found a few websites and I found a few videos, and basically the general consensus is something that truthfully I disagreed with. And they were saying that in all situations, you should not spend money to buy an investment property, but you should take extra money and try and pay off your home loan faster. I'm not a financial advisor, so I can't give you financial advice. But what I can do is go through a series of questions that you can ask yourself so that you can make a better assessment for your situation and make this decision for yourself. All right, I want you to do an activity, and I don't usually ask you to do an activity through a video. Don't worry, I'm not gonna make you jump up and down or anything like that. But I want you to think about the future. I'm not talking 1 year or 2 years or even 5 years, but I'm talking about further into the future. Let's set a time of probably about 20 years because that's probably how long it's going to take you to pay off your home loan. In 20 years' time, let's look at both scenarios. What are the benefits of just paying off your home loan? And then what are the benefits of buying an investment property? Let's look at just owning your own home and paying that off first. Well, you're going to have no rent and no mortgage to pay, which is going to be great. It's going to mean that your expenses will decrease because you've paid off your mortgage. You don't need to pay it anymore. You've got security because the bank no longer owns your home, you do. And if interest rates go up, you don't care. Doesn't matter to you because you own your home. So you've got, those lowering expenses, you've got that security, but you got no income. All right, your house is not going to generate you an income because you're living in it. You would actually have to rent it out to move. And it may go up in value, but I question as to whether that increase in value is actually accessible to you. Sure, you could sell it to access it, but then you have to buy somewhere else to live, and you're probably going to want to pay the same amount of money because the whole market would have gone up. So I vote that when you just pay off your home loan, in the future, yes, you've got some benefits there, but there's also some negatives that you don't have that rental income coming in and you can't really access your growth. You can, but not really. All right, now let's look at the benefits of if you were to buy an investment property. Well, firstly, you've got the negative of it might take you longer to pay off your own property. Okay, that's bad, but eventually you're probably still going to be able to pay off your own loan anyway, right? And the benefit with owning a property is that over time, even if you purchase a negatively geared property in 10 years or maybe 20 years, the chances are that the rent in that property is going to go up. And at some point in time, the rent is going to exceed the mortgage and expenses on that property, flipping it into a positively geared property. So that means that property is going to generate you passive income, which over time can be used to pay down your home loan or can be used to fund your lifestyle. So you've got you're probably going to pay off your home loan anyway. You've got passive income to help you fund your lifestyle. You've got capital gains that you can actually tap into. So rather than when we just had our home, yes, it's growing, but if we were to sell and move, well, the whole market's gone up. So we're probably going to have to buy something for the same price. With an investment property, because you already have your home that you live in, if you needed money, you could sell it and access that growth in order to fund your lifestyle. You may be able to get an equity loan against it. You can do what you want with it, but you kind of got that growth. You can sell and you've still got that security of your own home. So that's a massive plus. And basically, like, you're less reliant on super. So if you were to just purchase your own home, well, when you retire, you're going to be fully reliant on your super or on the government pension. Whereas if you own your own investment property, you may still need to draw from your super, of course, but having that passive income makes you less reliant on it. One property probably isn't going to deliver you complete financial freedom. I do know a story of an old lady that I read in a magazine once and I couldn't find it, but she owned one house and one investment property and both were split into 2 income properties. She was financially free of just those 2 properties. But for most of us, that isn't going to work. So you need to work out, well, how many investment properties do you need to own in order to be financially free? And so go to episode 77 at onproperty.com.au/77 and I show you how you can roughly work that out. I'm also about to add a new calculator to On Property Plus where you can type in your goal income and you can type in what sort of properties you're looking at, and it will then tell you, well, how many roughly do you need to be financially free. You can check out On Property Plus by going to onproperty.com.au/plus. Now I'm going to give you some advice, and my advice is stop thinking about either or and start thinking about both and. Rather than saying, should I do this or this, ask yourself, how can I do this and this? How can I pay off my home loan faster and purchase an investment property at the same time? And believe it or not, but asking that slightly different question puts your mind into overdrive and will help you to come up with solutions for that. One simple solution would be to purchase a positive cash flow property. Positive cash flow properties generate passive income above the expenses that you have to pay on it. So therefore, you could use that passive income to pay off your home loan faster. That's just one solution, and that solution's obviously not for everyone, but that gives you an idea of how you can pay off your home loan faster and buy an investment property. Or maybe you could look at building a granny flat on your home so that you could get income from renting out that granny flat. Sure, you're going to lose some yard space, but if it means that you pay off your home loan 5 or 10 years faster, would that be worth it to you? Start thinking outside the box and start thinking about how you can do both so that when it comes time and you paid off your property and maybe it's time to retire, you've actually got things working for you rather than just a house that you don't have a mortgage on anymore. Now, I do need to say that obviously there's going to be some risk out there. Investing is never risk-free, but do your research properly and you can minimize your risk significantly. So I hope that's helped you assess in your own situation, should you pay off your home or buy an investment property? And I like to flip that question and say, how can I pay off my home loan faster and buy an investment property? So until tomorrow, remember that your long-term success is only achieved one day at a time.